Ahead of a stock of the day, thought we'd take a look at Appen. Appen has plunged after yet another downgrade for the current financial year. The data provider, AI provider, it claims it is, expects FY22 EBITDA to be between 13 and 18 million US dollars, and the stock is down 15% today, and that is one ugly chart. Mathan, what did you think of the downgrade? I know you always say constantly you ride out downgrade cycles. You don't get into a stock until it reverses that downgrade cycle, and maybe you look at getting in the first upgrade. This one just continues down.
Yeah, it's a case study for quant analysis. You never get into a stock after a couple of years of upgrades going into the first downgrade, because you know more is coming. And once it hits multiple downgrades, you don't go in till they actually hit an upgrade and a solid upgrade. And Appen just goes from downgrade to downgrade to downgrade. It was a market darling. I guess the market didn't quite appreciate the risk in the model, how they had a small number of big clients. And when that started to unwind, things started to get a bit ugly. And they do not have the competitive advantage that most people thought. What most people package it as is not what it is, it's what they do. And Appen at the moment is struggling, and we have not seen the model turn around. Management really needs to do a restructure and try and get the model into a different angle. As it is now, will continue to struggle, and potentially someone will take it out at very cheap prices and put it as part of their model if things don't improve. So that's the problem that you face. If you're waiting for a multi-bagger recovery story, it could probably get taken out at a very low cost. So in that context, if you've been there, you held it all this way, I'm sorry for you, but the market doesn't care.
Right. Yeah. 8-year low, Grady. Horrible.
It's looking pretty bad. And I think Bell Potter Research, their title of the latest research is so fitting. It's waiting for it to happen. So we are still waiting for this stock to happen. And unfortunately, as we've seen with a lot of tech stocks, they've turned to recurring revenue models, which is through subscription and things like that. And it's so important to do so in this day and age when tech is getting absolutely smashed on the market, especially with interest rates. So with Appen, I think that because a lot of their orders and their revenue comes from purchase orders, not recurring revenue, and those 5 big clients, as Mathan said, they're not showing much strength at all. They're not showing us, or showing investors or anyone, any outlook that's positive. So for us, it's a hold, but I can't see why. A hold. If you're in.
Look at that, it got up to $40.
I know.
284.
Because what goes down must come up.
Right. Maybe not necessarily. I'm not sure about that. Mathan, if you're in it, would you have it as a hold, or would you just cut and run?
This is where, no matter what you say, you're going to get it wrong. Right. But the scary part is you've taken so much pain, you're probably emotionally disattached from the stock. Yeah. So you're probably not going to do anything at this point. You're just going to hold it and hope the management does something. Yeah. And I think in a risk-weighted way, that's probably the right thing to do. You've taken such a big belting. Yeah. You just got to hope that the management can do something for you.
Yeah, until if you make a massive profit somewhere and you're sitting on big capital gains tax, then offset it with big losses from this.